Assignment number 1. Let's see. All right. So a business owner makes 1,000 items a day. Each day she spends 8 hours producing those items. If hired elsewhere, she could have earned $250. This item sells for $15 each. Production occurs every 7 days, 7 days a week. If the explicit costs total $150,000 per month, what is her economic profit? All right, so economic profit, of course, considers explicit costs and implicit costs, okay? Now, in order to find out how to calculate economic profit, this is pretty easy. It's total revenue minus explicit costs plus implicit costs. All right, so the total revenue would be, let's see, total revenue is, it looks like she's doing production for 30 days per month. So price times quantity, remember, is how you calculate total revenue, okay? So the price is $15 each. We're selling a quantity of 1,000, and we're going to be doing it for 30 days. So this gives me $450,000 as my total revenue amount. The explicit costs were given at $150,000. So of course, all we have to do is just kind of manipulate this in order to find our implicit costs. Let's see. So our implicit cost looks like she could have been earning $250 per hour for 8 days, for 8 hours per day for 30 days. The implicit costs, remember, are the opportunity costs that are factored in. If you were an accounting major or an accountant, all you would look at was just the explicit costs, the total revenue, things that are actually tangible, the costs that you can actually see. As an economist, you also have to factor in opportunity costs, okay? And those are your implicit costs. So in order to calculate your opportunity costs, we would do the $250 that she could be earning per hour. So that's times 8 hours times 30 days. And this answer is $60,000. So she could be earning $60,000 per month if she worked somewhere else. So now we can add up all of these. We can go back to TR minus EC plus IC. So our TR, remember, is $450,000 minus the explicit cost of $150,000 plus the implicit cost of $60,000. So this is $450,000 minus $210,000. And this answer is, of course, $240,000. Okay? We can go on to, let's see. Of course, let me see, when you guys answer, we can go on to number 5. At the current level of production, if MR is greater than MC, remember from this chart right here, if MR is greater than MC, then of course you need to increase production. You need to produce more units. For number 6, what is the marginal revenue from producing the 4th unit? How I did this was I took it a step further. The chart gives you units produced, total revenue, and total costs. However, I also added in marginal revenue and marginal costs because we're actually able to compute those things with the information that is given. And that's actually how I found that answer for numbers 6 through 8. And then let's see, for number 10, It says use the chart above to calculate average cost of hiring 5 workers. Remember, average cost is this TC divided by Q. So you just take the total cost of hiring 5 workers, which is $5,000 divided by 5. It gives you around $1,000. Okay? So that will conclude our Unit 1 material. And stay tuned for Chapter 5 for Unit 2.